All right, listen up. You've probably seen this chart and thought, this looks simple enough, right? But let's get real. Price never just moves in perfect patterns like this. The market loves to confuse us with complicated structures, and if you misidentify your swing points, you're practically signing your account's death certificate. But don't worry, I've got your back. I'm about to show you exactly how to avoid that mistake and spot the right swing points every time. Stick around and you'll be a market structure pro. Trust me, your account will thank you later. All right, let's dive in. The first thing we need to do when we open a chart is look back a little further and check if there's a break of structure. And it's important. This break should happen with a body closure, not just a wick. Wicks can mess with our perception of the structure, so we avoid those. We're not out here chasing wicks unless we're chasing a bus, and even then, I'd suggest letting that bus go by.
What? Bro, what are you talking about, man?
Now, once we spot the break, we mark that point as our first swing. Then we look back to see which price action caused the break of structure. Here's where the magic happens. Spotting the correct swing is the key to understanding the entire move. Let me show you. Example 1. For example, if we look at this chart, the point where price breaks above this level is right here. This is the break. Now what caused that break? It's this low right here. This low is the reason for the break of structure. Boom, we've got our swing low. Now let's move on to finding the swing high. Swing high setup. Now the swing high comes after price slows down and forms at least 3 opposing candles. You know, candles that move in the opposite direction to give us a little sign of potential reversal. Let's take a look at this example. See how price slows down here? These 3 candles that are going the opposite direction show us that this could be a swing high. That's how we set our major turning points. Complicated market structure. Okay, now let's level up and get into some more complicated structure points.
Do me a favor, please. Get out of here. Get out of here, man. Shit, I'm saying.
Take a look at this chart. Which one is your swing low and swing high? I'm going to give you 5 seconds to answer. Ready? Go! So, did you say this as the swing high and this is the swing low? If you said yes, congrats. You nailed it. But if not, don't worry. Let's break it down further. Breakdown of example. Remember the first example. Look for the break of structure first. Once we have that, we look for the price leg that caused the break, and that will become our swing point. This price leg is crucial. It's the original price leg that defines the market structure. So why didn't we pick this leg here as the swing low? Good question. That leg is internal, not external, and serves more like a decision point, not a major structural shift. Pro tip. Always go with the original leg that caused the break. It's the one that controls the move. Easy, right? Now we're getting into it. All right, now that we've covered the theory, let's look at some real-world examples. This first one is simple to identify. I mean, look at this clean break right here. The structure is clear, and the swing low and swing high are easy to spot. But check this out. This next example is more complicated. Look at this price leg. As I mentioned earlier, this leg is internal, acting more like a decision point rather than the original price leg. It's like an annoying detour that misleads us. Price moves deeper into the structure and, at some point, completely changes its fractal pattern before moving in the right direction. All right, I think you're getting the hang of it. Time for a quick quiz.
Come on now, dog. Come on, man.
I'm going to give you 3 scenarios, and I want you to tell me where the swing points are. I'll give you 5 seconds for each one to draw the swing points. Ready? Let's go. Scenario 1. Look at this chart. Where are your swing high and swing low? Now on this one, where do you think the swing points are? And here, which one is your swing high and swing low? Answer time. Okay, time's up. If you marked this as your swing high and this is your swing low, you're on point. If you marked this as your swing high and this is your swing low, you're on point. If you marked this as your swing high and this is your swing low, you're on point. If not, no worries. Take some time to go back and study the structure we discussed. You'll get it with practice. All right, now you know how to spot the right swing points. avoid the common mistakes, and never misidentify a market structure again. Remember, it all comes down to recognizing the original price leg that caused the break, not the internal decisions. Keep practicing, and you'll get better at this every time you open a chart. If you enjoyed this video and found it helpful, please give it a thumbs up and subscribe to the channel for more content. Got questions or want to share your quiz results? Drop them in the comments below. I'd love to hear how many you got right. Till next time, keep training your eye with Chart Spy.